May profits be upon you. Welcome back to my YouTube channel. It's RT Money, and we're going to take a look at EURUSD, and we're going to do some top-down analysis on this. Let's take a quick, sneaky look at the weekly and the daily. All right, on the weekly, what do we see? What are our observations? Aha! Let's take a look. I just had some coffee. So, all we want to note is it's bearish, right? We've been bearish for quite a while, and there's a lot of momentum in this bearishness, all right? I need you to pay attention to that, the nature of the impulse, right? So we have a lot of bearishness. I want to also make note, we closed the week bearish and with a rejection as well, all right? That's the kind of things you want to make note of, but also it's a strong indication that price is very bearish, not only because of this big giant impulse to the downside here, but because we broke this demand zone. We broke this demand zone and flipped it to a supply zone. All right, this is a flip. So when you get those flips, you know who is in control. Supply is not, supply is in control. It took control from demand right here. All right. Now, where are we at now? We're at this demand zone on the weekly, right? Had a nice reaction, came up, pop, 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 pop. Do I think this weekly demand will hold? No, I do not. I do not. I think it'll crack. All right. Why? Because you see that wick coming into this portion of the of this candle. This is what I call demand wick, the wick demand. All right, there's a demand in this wick, of course, but it's already been mitigated. That's all. That's what I'm pointing out. All right, and that just means that there's no more buy orders here. You know, there's some to get. Obviously, we took some out here, mitigated again, but this is 2 times it's been mitigated. All right, and look at the reaction. All right, this isn't a lift off reaction. Wow, turned into a big old doji here. We filled the upper portion of the previous wick. All right, and now we have an inside candle. All right, this represents supply for me. Inside candles represent supply and demand zones. All right, and in this instance here, it looks like we're going to be setting up for more supply. It looks like we're going to continue this bearish momentum. All right, those are my observations on it. You might have something different. That's fine. All right, moving on to the daily. All right, we see the reaction. All right, just make note that we had, you know, lower low, lower high, lower low. This is actually technically a higher high, but we didn't break this demand. I mean, this supply for me, all right, with a wick above. That's just a liquidity grab for me, all right? So unless I get a break and close above that high, all right, this demand is still intact, and it acted like it. So we broke the structural point here, an important structural point here for a break of structure. And you see that price is now in this correction. All right. What are the notable things that, where are we going? All right. What are the notable things to take with us on this one? All right. This is not important anymore. I don't like a whole lot of stuff on my screen. All right. When price comes back, we make this high point here, right? That high point becomes a weak target for liquidity. Why? Because it didn't make a new low. All right, that high is supposed to break that low. It didn't. All right, so it becomes weak, and price goes right after it, takes the liquidity. All right. However, it leaves relative equal highs behind. That's why I have it noted here. All right, so that's going to be a magnet for price, and we'll see when it comes to get it. All right, if it's going to sweep, when it it's going to sweep buy side liquidity is always the question. When is it going to sweep liquidity? Doesn't have to do it on our timetable, right? Price doesn't what it wants. The markets do what it wants. All right. But we did have a bearish engulfer here. Price did go up and test the base candle, and we've been bearish since. All right. Now, you see that the last 3 days have been very bearish, especially on Friday. We had a nice rejection from the upside, and we have relative equal lows here that we're going to see much more clearly on my 4-hour time frame. All right. You can note that price did come up to take that liquidity, and we've fallen since. But what I want you to also note, not that mark. All right. What I want you to also note is that as we broke that high, this is a break of structure. This is a sure enough pullback. All right. At a higher high. I don't care how you look at the markets. All right. And you could say that we should be moving bullishly from this point. Now, higher, that's on this time frame. The higher time frame, we're still within this trading range. All right, the higher time frame from this swing high to this swing low, that is our trading range from the daily, the weekly. All right, but on the 4-hour, it looks like we're making higher high, higher low, higher high. Got it? All right, we're marking momentum here. Don't get caught up in the terminology. Don't get caught up in this. How do we correlate from higher time frames to lower time frame? Trade the frame. Just note the time frame in front of you, okay? And we'll see how it works with the larger time frame intention. All right. The larger time frame intention is bearish. You understand? We're broke structure. We made this low. We're in correction here. All right. After an impulse, we look for that correction. All right. The question becomes, is the correction over? Are we going to continue with the bearish momentum from the higher time frame? All right. The intent of the higher time frame is to make a lower low. All right. But on the 4-hour right now, we are bullish technically. And I'm looking for things like this. From this swing low to that swing high, where are we? We have hit the 618 golden ratio of the Fibonacci retracement. All right. Now, I'm looking for highs to be made. All right. I'm looking for a price to continue higher. Once we hit that 618, that's a great area of support with using the Fibonacci tool. However, we didn't break these highs. What does that mean? What does that mean? You should already know if you've been watching my videos. Weak highs, weak lows, right? So is this a strong low? Is this a strong low? Is this a strong low? It didn't make a new high, man. That means liquidity targets. That's right. And we look like we're heading towards those. This looks like we're going to be taking those out, targeting this low. All right. We are already in this demand from this from that wick. All right. And you see how many times we've mitigated inside of this demand. I believe this is going to get taken out as well, right? What about this one? This is where we're going. All right. This is going to be our POI, and we'll see how price reacts once it gets here. All right. But do I think it'll hold? Speculating, just speculating? No. Why? Because we're already mitigated into this demand. We've already mitigated into this demand. All right. Maybe we get a reaction. All right. But this reaction will give us a nice pullback, so we can take another valid short. That is in my view. All right. If we go down to the 15, if we go down to the 15-minute view, all right, we have our targets. All right. We have momentum to the downside. That's something that we just got to note. All right. did price come up into the fair value gap here? Because this is what you want to see. You want to see the fair value gap being created after a formation of a zone of supply or demand. You want to see that fair value gap because that gives it validity. What did this order block accomplish? Well, it broke a low. All right, it broke this low. This one is going to be a valid order block. That's how you choose. You understand? You got to have criteria. You have to have criteria. So I'm looking at the unmitigated portion of this zone of supply. All right. And this is, oh yeah, this looks classic. This, you want to see if price is going to test or come back and mitigate this. You want to see that there's a imbalance to fill. You want to also note that there is what some people are going to call it an inducement point. All right, to get people to take shorts early, come back and take them out, take out their stop losses, mitigate the order block, and then continue bearishly. Okay, this is what you want to watch out for. This is the purpose of this displacement here, and then generating orders, you know, is for market makers to make a sweep high, sweep low. All right. In this case, I'm saying that for sometimes it goes exactly the opposite, sweep low, sweep high. All right. You know, it could do both, but with the bearish momentum of the higher time frames, I'm going with taking out the liquidity point, filling in the fair value gap, and continuing low to take out these liquidity targets on the sell side of things. Okay, so that's where we are. There is a zone of demand here. All right, and we'll see how price acts when it gets there, you know, or when it comes into contact with it. All right, this will be a good TP point if we end up price comes back here and we take a short from there. This would be one of the TP points that I would look at, but I would be definitely aiming towards holding for the liquidity points here. Okay, I hope that makes sense. I hope you've benefited from this analysis, and remember to give a like, you know, just tap the like button, subscribe so you can catch the updates, and do leave comments. All right, I love your feedback. Everybody knows I respond to every doggone guy, every trader that leaves a comment. All right, I love hearing from you. So I will see you in the next video. Trade safely.